Well, hello everybody. It's midweek update time. It's Joe. It's the 25th of May. Just flown through this month, personally, for me. Got school getting out. Kids are going to be home. I got to find a summer camp pretty quick because it's going to be a pretty interesting summer, especially if these markets continuing their same direction or what's going on with them right now. Let's get into it. All right, guys. I've got my 2 cents. You know how this works. You've got your 2 cents. Let's share. Let's just take responsibility. All right. So, real quick, we got another test of the lows, and it's holding so far. Now, last Wednesday when I had this class, we actually fell apart. So we were discussing, hey, we could see a rollover here. We'll see how far it goes, and it did. It completely fell apart, but it stopped. Friday they had a little bit of a flush out. We talked about that on Sunday's class with that leg that broke the support levels, but it came back, and so far it's been hanging in there. We were expecting a pretty good rubber band snap back, and we haven't gotten it. We do have 2 more days, 2.5 days, right, for the rest of this week to see if we can't bounce back. But we did see this. We did see a bounce last week where about Wednesday it just rolled over and fell apart. Okay, what does that mean? It's definitely selling. It's a complete bearish market. We're selling off, bailing out of the high flyers. You've heard Corey and Rob tout about this with Target and Walmart and everything that was decent is getting smushed. Stocks are punished for weak earnings and weak projections. Folks, I've got a chart I can show you if you really wanted me to. Somebody's got to remind me on the chat board. But Zoom came out and beat numbers and projected higher next quarter, and they're not doing so well. After their numbers, they're up at $106, and they came all the way down to close. I should say open negative for the day. So I'm starting to see good news punched as well, and I just think it's just constant selling. It's totally normal. Now it's not a panic selling. It's just a nice, slow, steady. The road could be a little bit muddled as we get deeper into the summer and even into next year, folks. If there is that scary R word, we're not going to feel it on the front end. And what I mean by that as our day-to-day until probably 2023, maybe the first quarter of that. Hopefully not into the holidays or anything like that this year, but we'll see. So we are showing contraction in some key areas: manufacturing, leading indicators, a little bit in housing, kind of a stagnation in housing. I thought housing would be the first to fall based on the interest rates and the anticipation of not wanting to pay higher interest rates, so on and so forth. But there's still, once again, the front end, the retail person, the consumer, us. We still have money, and it's still keeping things going. But manufacturing is slowing. We've got a supply chain issue that's really starting to hurt. We're worried about all sorts of different things, not just locally but globally, folks. And when it comes to manufacturing, the leading indicators, that's why we're going to see that PCE number tomorrow. We see 2 or 3 variants of it, and we do have Fed minutes. Is that today? I don't know if that's today or tomorrow. We'll see. But we do have a hawkish Fed, so on and so forth. So there's contraction in some areas. This doom and gloom is starting to show its head on the macro side. The micro side, we're still churning along. Understand, folks, the markets aren't a relation. There's no relation to the markets and the economy. They adjust based on what they expect the economy to do. They're forward thinking. People talk about the projections, meaning we're about 6 months, 7 months ahead. The stock market usually is of what happens to us. So we've got this doom and gloom and fear, and we've got a market that's falling apart. And how low can it go? I'm just going to answer the question as low as it wants to. Right? It's still driven by the investor, who is actually a consumer. There's your little tip for the day if you want to talk about your macroeconomics. And my opinion as well. Sorry about that. Let's get into some nitty grit or some fun stuff. Here's some trade ideas. Yes, we've got a couple from last week. AT&T and down on the bear side, Alcoa. Both are looking very good. Both are doing what they started as, a bull with AT&T and a bear with Alcoa. Let's get into a few more as I pulled some from this week's classes. And we have some interesting charts. Here's AT&T in the weakest sector that I've ever seen, communication services, right? It is just this bright little star, and the infrastructure, I guess, that they have, and some of the whatever hands or whatever irons I should say they have in the fire. There's a lot of bullish sentiment in there. Beautiful ascending triangle breakout of resistance set in January, the mid-January there. You guys can see that. Beautiful move up above 21. Diagonal spread all the way. Will it consolidate or pull back? Of course it will. But it's still an outperformer, and it looks really, really nice. Let's get to SU. Another energy company. This came off of, I believe, Sunday's class and carried into Monday and Tuesday. So still looks really good. Diagonal spread as well on this. Nice consolidation breakout there around the $38 level. Outperforming in the right sector. Things are looking pretty decent. Here's Gilead Science. Now Merck's been up here for a while, and it looks like it's a little bit of a pullback or corrective action. But here we are with GILD, and it looks good at the 64 mark. I like the diagonal spread on this, or maybe a consolidation move, something sideways. If you guys want to be able to absorb a market that could roll over at any time. Yes, folks, I'm obviously still bearish. How can you not be? But this seems to be a decent little outperformer. So on the bull side, there's trades out there. I would really suggest short term. You've probably heard this throughout at Maverick. I would go target based. It might get there in 3 days. It might get there in a week. Who knows? Just when it's there, get there. Rolling over, as things go to the bear side, folks, we do have more time. So you could slow play the bear if you want. Now on the sideways, this was an interesting stock. Both sideways here could be played with a direction. This is a symmetrical triangle pattern, folks, if you want to really call it what it is. Let me get my little pin out here. And I'm just seeing a pretty strong symmetrical triangle pattern through here. These usually break out in accordance. Well, I mean, it's usually 50-50, and it's just my opinion. But it usually breaks out in the direction of the overall trend that it started from. In this case, it's up. It is above its moving averages. This could be a really nice consolidation breakout up to its 1225 there. Or if you guys think it's going to be bearish and roll down, you've got a good target here at 10.5, maybe even lower. If you don't think it's going to go outside of that, butterfly spread, condor spread to give yourself a little bit of range, or just slow play it with a calendar spread. Calendar spreads can be kind of cool. I'm not sure. I didn't check, folks, if this has got weeklies on it or not. It would be really ideal if it did. But it doesn't look like it's too big of a mover. It's like, geez, Joe, you're talking about 11 to 12 down to 10. You'll see with the leverage of options, folks, it doesn't really matter. There's money in it. So that could be, once again, depending on what you're looking at, consolidation sideways or maybe consolidation breakout candidate if you want to play it directional. This is Coinbase. This is a sideways trade, and yeah, I'd have to agree. It's sticking pretty close to that $60 level. What's tough about this is this is a pretty good, that's a $20 range through here, and it did bounce off of, what do you want to call this, 55. So it's a lot more volatile than you think, even though I try to zoom in on this. But a condor works, a wide butterfly, 50, 60, 80. You could all toy with all sorts of different things. Now, if you think that we're going to see more weakness in the financial markets, and we could see some of these cryptocurrencies start to roll over, this should kind of follow suit. And this is going to be a little tougher because of the inactivity of cryptos. This is a place to trade it. So it becomes like a mercantile exchange or the CBOE, places where they generate money based on activity. So this could lose money even if crypto doesn't fall apart. It just depends if it's active or not. So it just depends. If you're bearish on this, then you might want to see it, target it down to 60-ish. If you're dead sideways, then yeah, go through and see if you can't play something sideways on this. But I could see an argument either way. It's a little volatile to do anything too long-term sideways. So you might want to give it a bias in one direction or the other. All right, so let's move on to our bear side. This is Alcoa. Came from this class last week, and it did well, right? So here's our Wednesday. It looks like it was confirming it's going to fall apart. Hey, let's do a credit spread on this or even directional, and it hasn't really broken down yet, but it didn't do anything. So if you had a credit spread on this or a diagonal spread, what you sold has just been bleeding off since last Wednesday, which is really nice. So you're keeping that credit, or it's allowing this to kind of work, but it's still in a really good position to where it could just kind of spill over. It doesn't have to fall apart. This thing could take its time. So I like that one. Thought we'd just revisit it. Let's move over to the next. Now, folks, I didn't really get to go through any of those, all the bears, but I did have, let's see, 1, 2, 3, 4 automakers in there. So this is one of them. I just picked one at random. They all have very similar charts. It's got 2 Chinese automakers in there, and then Rivian here, and then so just don't do all 4. Just make sure you just pick one chart that you like. I like this one a little bit. First of all, it's U.S. stock. It did hit this $30 resistance level. I thought that was pretty cool. Consolidated. Well, it didn't really consolidate. It just took 2 days there, and it's just kind of bleeding over. So we could slow play this, I think, to the bear side. Just depends on what you guys are looking at and what your sentiment is moving forward. But, this thing got up to, boy, I think $160 a share when it IPO'd. And it's just been getting slaughtered ever since. And yeah, folks, there's still more to the bear side. Understand this had a market cap larger than Ford when it first opened, and it makes one car. I think it's got a truck and an SUV, and that's about it. And they're just starting to now deliver them. So keep that in mind. Let's get to another bear. This is UL. This will be our last one. I thought this was cool. It's Unilever, consumer defensive, and it's in the UK, so it's overseas. That's why you see a lot of gaps. These candles are a little tricky, and they're a little bit more volatile, so you're going to have to be aware of that if you're playing this and you wake up, it's going to gap up pretty much or down every day. But I do like this gap down, retrace and retest of kind of an area where it's been before. Let me draw a straighter line here. Right through here, it's kind of got this channel. So it climbs back up to this channel, and then today it's gapped down, and it looks like it's about to fail to this level. So vertical spread on this. I don't know if I'd do straight puts because it does gap quite a bit, and it might be kind of hard to get the bid ask. It might be a little wide. This would be a tough one to try to play overnight, so you probably want to get into it, give it a big berth area. What I mean by that is please position size this for max gloss. That way if it gaps up to 46, you're just not there, going, oh, what do I do now? But it does look really good. I do like the pattern overall. All right, and understand, guys, this weakness isn't just U.S. specific. This is global. There is global slowdowns all over the place. We've got inflation in different areas. There's supply chain issues. It's not just the U.S. Okay, so let's get into a market analysis. These charts are looking bearish, but it's cool or interesting to see, and I'll try to point this out, that they're in different levels. The Dow is actually, or the diamonds I should say, is actually having a pretty good bear rally. It's not a really good one, but it's having an anemic bear rally. The SPY is consolidating, and the Qs is got a descending triangle pattern. And we've been seeing this. Boy, I've been talking about this for months. Money has been coming out of the tech since the beginning of the year. Very, very consistently. It's only up until about the last month or so that the accelerator's been pushed down, so it's coming out a little faster. What's interesting to me, guys, I'm not seeing panic yet. I'm just seeing an increase in selling, but there's no fear. It's just people ringing the register right now. So Dow, S&P, and Qs are all down. This is from Wednesday to Wednesday. Down over 5% still, so not a real good bounce. You can see that the diamonds and the SP actually recovered some of their losses, and that's not over. We've got the rest of the day and 2 more days. We could see a bounce or more of a consolidation. Oil and gold, bouncing. Good bounce on gold, actually, pretty strong, but you'd expect that. Here's the SPY. This is the consolidation area that I'm talking about, right through here. So we're under the 400 mark, but we're not quite through the 390. Now, talking in the trading room, this little hesitation, this little leg with we would call that a wider body hammer candle, looked like a pretty good pivot point. And so I was expecting a move up to 410. We could still get that, but it just fizzled out. It just kind of fizzled out, which leads you to believe there's a little bit more bearishness here, or just no one really wanting to try to cover a short or buy off the bottom. Two things. Those are both bearish. Those are both skeptical, half glass empty outlooks. So we'll see if that's going to continue. Here's the DIA, right? Diamonds also I was expecting a retracement back up to this area. It's not done yet. Maybe back to the 20-day moving average. But what's interesting about the behavior of the diamonds, it gapped down the last 3 straight days. Or 2 straight days, excuse me. So we looked pretty decent on Monday. Tuesday, gapped down, went down, right, down to this low, came rallying back up to close slightly above. Today, gapped down again. So there's reluctancy, but there is money coming into the diamonds here, and it could be a lot having to do with energy, right? There's a lot of defensive stocks in this ETF, or represented in this ETF, I should say. Now the Qs, on the other hand, just not feeling it. Just not feeling it. And this is the argument that my bears will pull out. And the expectations of a bear rally, at least up to the 20-day moving average, but it's accelerated, or the 320 mark, or maybe even 310, whatever you want to call it, but not even close. So here's Friday's candle. Opened straight up, came back up with the rest of the markets, and then look at the gap down. Did not retrace like the diamonds and the SPY did. Gap down. It's coming up a little bit today, but this just looks really, really ominous. It just doesn't look good at all. So this is where my bears come and say, Joe, we're in for a massive flush to the downside. And I agree. I agree. But we need to see it first, and it needs to be confirmed. I'm telling you one more time, folks, the VIX has to spike. It's not spiking. Well, you can take a look at it if you want to, but it's not spiking. It's just this selling is increasing. This isn't panic. So let's get into some economic reports. Yeah, okay, the minutes for today. Cool. I don't think there's going to be anything good said in those minutes. We've seen a lot of news articles, and this happens too, folks. When the markets start to panic or traders get worried, you start to see articles blaming the Fed. And I believe I said this last week. However, if that continues, then you're going to see true fear spill in to the markets, and we'll see that VIX pick up. Markets, they didn't do what they should have done. They should have done this earlier, and it's so funny. Anyways, you'll enjoy the articles as they continue. So we had the manufacturing and the services PMIs. Not too bad, in line, so on and so forth. The new home sales ticked lower. We talked about that as well. I think last week we had existing. We knew that was going to happen, so it's starting to slide off. Durable goods orders, not a good thing. Not a good drop. And if you guys watched the Empire State Index and the manufacturing PMIs of last week, we actually went from a positive to a negative. That's falling apart. That is, we just can't get the material to manufacture. We don't have the demand anyways. And even if we do get it, we can't get it to you. So yes, that's a big bottleneck. That's the macro side. It's happening now. We haven't felt it yet. We have the jobless claims, continuing claims. We got some GDP revisions coming up Thursday. Pending home sales and the PCE inflation's numbers. I didn't write all three of them down because they're all there. And then consumer income spending. There's going to be 2 or 3 of those. It's just measuring inflation. The PCE, I do believe, will be commented on today in the FOMC minutes. So keep an eye on what Powell says about that, because that's where he gets his little hawkish or his doom and gloom, or maybe it's a little bit better than we think. So we'll keep an eye on all of that. You are going to see reaction to anything the Fed does over the next now and at least through the summer. So with that being said, I'm going to launch the poll and see what you guys are thinking about. And this is an unfair poll now. You want to know why? Because there's no -3. There's no +3 either. So if you guys are -3, just click on the -2 twice. How's that? Because you can click on this multiple times. Don't click it too many times, though, right? No. So we came out as -3, but -3 for well. I've seen a 0 in there. I've seen a -2. I gave it a -2 last time. Because with Wednesday's class, folks, I gave it a -2 for the week and -3 for the month. And it did for that day. And then it just kind of fizzled out. So moving forward, it'd be interesting to see what you guys are thinking. Not too many voting. That's fine. Okay. If you don't have an opinion, that's pretty good. Here's something interesting as well, as I do see this vote. Usually I get you guys voting, got 90% pretty quick. Sometimes we have this class, got a lot of people that just kind of sit there and don't push the button, which is cool. If you feel that way, you got to gauge yourself off the majority. The majority of people trading out there probably feel the same way. So if we've got a market that's tailing off to the downside and nobody really has an opinion of bull or bear, it's not going to bounce. It's not going to go anywhere. But I'll tell you what people don't like is the unknown and being uncomfortable. So it's probably easier to jump out of the markets than it would be to say, okay, I'm just going to go ahead and buy down here. I haven't seen or talked to any trader that wants to buy as the markets are falling. They're looking to when it ends and it bounces, but not while it's falling. There's my psychology corner for you. Geez, you're getting so much out of today's class. All right, let's go ahead and close this poll. You're probably sick of looking at it. 76% of you guys have voted, so not Whoops, share. There we go. Don't need this. There we go. Okay, so -1, -2, probably -1, right? Dead, dead set on that, and that could just be the shorter term, not looking bullish, but still not super bearish. All right, okay. So thinking that maybe we don't get the bounce, is that fair to say? I guess you'll have to figure it out. I got nobody to respond to that. Okay, let me hide the poll here, and I'll get to my point. Whoops, I have to share my screen again. Sorry, folks, little technical difficulty. Okay, and let's get back to, there it is. Okay. So I am going to be sitting at a +1. I debated so hard on if these markets are going to climb higher or just go flat. So I almost put that bar right in between the 0 and the +1 because consolidation to me still shows a little bit of strength. But I have zero faith in this thing moving forward and really anxious on just jumping on another round of shorts as they pop up. Okay, guys, thanks. So let's get into the sector analysis, and it's funny because here at Maverick, none of us have really changed. We've been super bearish for a while. Some of the accounts that we're seeing that are active are leaning to the bear side, so great work. It'd be nice to get into a bull. Just the timing is going to be really tough. So what do you expect? Energy to be strongest and communication services to be the weakest? Yeah, it is. Take a look at what we did here. This is a consolidation bounce for the last few days, and utilities up, real estate hanging on, communication services fell. The consumer number today, folks, is the consumer cyclical, right? So it's going to be the more volatile one, not the staples. Technology flat. Technology is not participating in the bounce over the last few days. Interesting, right? Materials and energy, straight up. So let's take a look at the energy. We took a look at it here. Let's see, here. So it was pulling back. We talked about, hey, we could pull back, bounce off the 80 and move higher. That was Wednesday, and guess what? It's done just that. So looks pretty decent. Still strong. Let's jump into the communication services. Not so much. Right. If I was just to take a look at the sector by itself, I would have completely thought that the Dow or SP and the Qs are breaking into new lows just by this sector, and that's not the case. They're actually hanging on. This one is doing everything it can, not just to fall apart and die. So let's do a quick conclusion, and we'll go out and look at some trades. I believe we remain volatile. I don't know how we don't. We're going to be reactionary to individual stocks and sectors. You've seen how some of these numbers have come out and missed and just been obliterated. 20% drops, 25% drops in Target and Walmart. And you understand, folks, these are companies that have enjoyed 4-year moves to the upside. So they all came at once, didn't they? A lot of the stay-at-home stuff's bleeding off, but we're seeing some bounces in some of them, like Peloton and some of the ones that have been beat down. But I'm seeing stocks like Zoom, who came out with decent numbers and better projections, still not really rewarded. Not beat down, but not really rewarded. So the bounces are going to happen. They're going to be super hard to gauge because we don't know how long they're going to come. Understand, the last couple of weeks we called for a bounce. The first time we were right. The second time we were a little bit off because it didn't bounce. It's just kind of gone sideways and muddled. So if we were bullish Monday, we're not doing very well, even though the markets aren't falling apart. So they're going to be hard to gauge time-wise. So when you do see the bounce, find that bull, find whatever you want to trade, hit that target, put that target up there based on a chart or a level. If it gets there, take it. We can't say, okay, and I think this bounce goes for 2 weeks. I think this bounce goes for a week and a half. That's just not going to work. Now, let's go past that. If you don't want to play the bounce, you don't have to. Sit back, watch your bears, and when a bounce happens or finishes itself, I should say a rally, confirms, rolls back over, jump back in, some more bears. It's okay. Do it that way. Sentiment, exactly. Bearish. Selling is strong, but it's not in panic mode. I know people talk about capitulation and bottoms. This could be the bottom. Even Rob corrected himself on Sunday, saying that, well, this is not the bottom. This is a bottom. And he was talking about Friday's doji. the bottom will be very obvious, and we'll unfortunately we won't know about it for another week or two past that. So keep your eye on the VIX, keep your eye on the volume. No panic selling just yet, but it's pressured. There's a lot of selling happening. So we're starting to see the show. We're starting to show contraction in the back end. What I mean by that, the macroeconomics. We're starting to see the housing slow, manufacturing having problems, this inflation pressure really rearing its head. Well, people are trading, well, yeah, I pay more at the gas station, I pay more at groceries, but I don't see it really hurting the economy. It is. It's starting to show on the macro side that supply chain is really hurting, demand is really slow, and inflation isn't really coming down yet. I don't think it's going up. I have to agree with Corey, but I don't think it's coming down. But the consumer, our front end, us, we're still cool. People are employed, and I think we stay employed. Prices are up, they hurt, they suck, but they're not. I shouldn't say they hurt. They're not killing us or hurting us yet, but we're aware of it. So the front end is still keeping us, pretty comfortable. I'd like to see one catch up with the other pretty soon. All right, that's it. There's my 2 cents. Let's get to the markets and some of the trades you're looking at. If I can resize things where you guys can see. Okay, looks like I've got a whole lot. All right, let's do this. Oh, wow. Okay, we're rolling over a little bit. All right, we'll see. We'll see if we fall apart. Or hang on. Let's get up to the top. Neil, UNG. I got a 30-35 diagonal call spread is what we're looking at. Okay, nice. Natural gas having its little run. Expiring on the 6-3 and the long on the 24th. So this is the 24th of June, which I believe, let me take a look at our calendar here. Is that week 4? Yes, week 4, but he sold week 1. Cool. I like it. Let's write that down. So guys, that's a 30-35 diagonal on UNG. All right. And thank you, Neil. We got another one here on W. W was also on the list. I don't know if I put it back up. I wasn't sure. I think it was on the Bear Watch. Yeah, it was. Let's zoom in on this one. Okay. Bear put expiring on June of 50-40. Okay. All right. All right. Let me put W down on the bear. Now on the so that is, what are we at here? 25th. Let's try to count my days here, guys. Okay, 1, 2, 3, 4, 3.5 weeks. So we have 3.5 weeks from today till the 3rd June of expiration. So if you guys just want to make a mental note of that, so hopefully I don't forget. But I'm okay with the slow play to the bear side. I think that's fine. All right, let's take a look at TLT. For James, we got a 115, 121 and a half, 123. I better start drawing stuff. And we're doing a bond ETF here, folks. 115. All right, 121 and a half. Of course, you had to pull that one, didn't you? Probably somewhere, I imagine, up in this area. I'm just going to kind of guess. And then 123. Aha, there's your break. Okay. I'm okay with that. Just expecting this bond to kind of bleed higher. It's fine. Fine. I can actually put that, no. Well, I was going to say if I put that sideways, maybe I'll put that on the sideways. It's slightly up, but okay. Not bad. Thanks, James. All right, who's next here? Uber, Broken Wing. Moving along. Ah, neat. 23, 21, 19. And I imagine this is broken to, puts, so broken to the downside. 23, 21, 19. That's hopefully the best I can do, but I like that. So expecting it to maybe come down, come back, or just consolidate there. But if it rolls and falls apart, that's the beautiful part about a broken wing butterfly, isn't it, guys? Let's take a look at this thing right there, up and down, and sideways. Broken wing put butterfly. Nice. Looks good. Fun trade. Moving on. Sorry, folks. It looks like we got. I'm going to have to do a little bit more reading than usual. A giant ascending triangle pattern. Yeah, it does. Diagonal call spread may be a good way to bullish energy without volatility. Stock. Sure, Robert. Look at this. He's talking about this big, huge ascending triangle pattern. That's really nice. Diagonal that all day long. Sure. Yeah, I like it. I think a diagonal spread would be really cool. And you could play it pretty wide. If you really believe, if this is going to continue, play the 80. Sell a 82.5, sell an 84, sell an 85. I'm not sure if it's got dollar strikes, but you could probably sell that 85 2 or 3 times if this continues, right? So I like it. Let me put it down on the bull. Okay, moving along. Where am I at here? Oh, Justin wanted me to zoom. Sure. He said a reminder. Let's check the zoom chart. So I was watching this, and I was pretty impressed. I'm like, whoa, somebody came out with really good earnings. So I took a look at it. You guys take a look at that volume. But then I did this. I think it's on the 5-minute. I have the pre and post market. Let me jump on. Yeah, there it is. Got to zoom out here. Oop, or zoom in, I should say. And so it was pretty crazy. If you could see that comes out, beats its numbers. This is post market. This bad boy closes at, what do you want to call it, 80 something, and it hit 106, 107. Then pre-post market came all the way back down. Still good. I mean, this is still a pretty good opening. I'm going to draw my arrows from here to where it closed. That's awesome. That's really good. This was interesting. I couldn't believe that was its first move, especially after, that it hit 107. Not saying that this thing couldn't take the next few weeks or days or actually climb back out there, but it just shows you the first reaction to a good news, which means if you've got a bear market, you've got pessimism, or traders that want to get out, the best thing you can do is sell against good news. And when you see this amount, I was just, okay, there is still people trying to get out of some of these high flyers. Doesn't mean Zoom's bad. It just means the market really didn't take it as it would have in the past. Can you imagine just last year, Zoom coming out, beating projections, beating numbers, and projecting higher? This thing would be at $130. It's just a different market we're in. So hey, thanks for reminding me, Justin, because that when you see things like that, it just kind of confirms the sentiment that's currently out there. Cool, thanks. BWA Condor for the 17th of June. We've got 42.5, 40. Let me start drawing lines. 40, 42.5. Right about there. And then 35. Right about there-ish. Okay. All right, what are we looking for? Auto parts? Yeah, maybe just a revisit to resistance. Sideways to up, sideways to kind of a consolidation move. I'm okay with that. Can I put it down on the sideways? I will. Hey Joe, if that's more bullish, let me know, and I can put a little up arrow on it. But I like it as just kind of this thing. If you're probably looking at some sort of a range, although it looks like it might be turning here, so I could see it either way. Okay. Again, continue to be punished down to 78. Trade stations also. Sorry, Robert. I'm reading a little bit of a marathon here for you. Borrow rate. It's that heavily shorted. It might be worth looking at some sort of a ratio spread. Oh yeah, okay. So I love how Robert. I'm glad you started out with saying I hate being that guy. We're all that guy. I just don't hate being a guy. The idea is GameStop's still heavily shorted. We've seen this thing be squeezed. We've seen all sorts of things. This has been a pretty manipulated stock. Personally, it's one I haven't touched since day one, but I've spent a lot of time talking about it. I believe, Robert, let me if I can just summarize this. Um, Thinking of push back down to 78, showing a heavy short borrow fee. Yep, 104%. Wow, that's crazy. Some sort of ratio spread, just in case there's any positive news, cause a little bit of a squeeze. Yes. Um, that the only way that I would feel comfortable playing GameStop. Let me roll down here. The 17th. Oh, maybe that's just not it. But I think we got some sort of announcement or earnings. That'd probably be the only way that I'd be comfortable playing it, and it will be a swing for the fences. So if it is a short squeeze situation in today's action, I mean, geez, 15%, man, this thing is just going to give you a heart attack. A ratio spread, for sure. I am completely, totally behind a ratio spread on this. But understand, let's just start with the call ratio. You got to put it on wide. I do like your lower target here, maybe that 78 where it was before. Well, let's just draw this. However, if it does a drop down and then squeezes, you could see a rally back up, which is really neat about that. Now, if you wanted to do a put ratio spread, it's the exact opposite, right, folks? So it just depends on where you're at, Robert. If you want this thing up or down, earnings are next week. Thank you. He said earnings are next week. I'm totally fine with that. In fact, that's probably the only way you want to do it. Now, be aware though with the ratio spread, as you increase that ratio, 3 to 1, 4 to 1, 5 to 1, 6 to 1, 7 to 1, your risk increases. A lot of traders will say, oh yeah, hey, I got it for a small credit. But what they don't understand is this bad boy gets deeper and deeper and deeper as this gets steeper and steeper and steeper. Yeah, try to say that 10 times fast, right? Oh, whoops, that should have gone lower. More like that. There you go. So your risk will actually increase as you ratio more and more. Just don't go too far. You can make a good chunk of change with a 2 to 1, 3 to 1 ratio. You don't need to do a 7 to 1 and just lever that up. I mean, it's great if you're right. But this thing will probably, it could hit 78, get back up to 120, well, maybe 110, and then back down to here. And you know how volatile this bad boy is. So that might be something fun. If you guys want to go play around with that, have fun with it. I think that might be kind of neat. Just I throw a couple bucks at it, but don't leverage your house on it, right? Of course you won't. Thanks, Robert. Thanks for being that guy. Well, that's kind of fun to talk about stuff like that. Let's take a look at COP. Interesting bull. Recently able to push above the 108 level. Sure did. Things could change. The chart looks like the other. Yeah, macroeconomics don't take. Yeah, let's. Yes, this is something that's going to weather stuff. So I saw this years ago with all ConocoPhillips, Chevron, all those guys. When oil goes up higher, lots of these companies are supposed to suffer, but they don't. And what took me a long time to really figure out, or well, actually it came out after a little while, is a lot of these companies sell their futures contracts. So just because oil goes up higher and higher and higher and there's less margin at the pump because of restrictions of price gouging, which once again, I can argue that there is no restriction on price gouging, but their bottom line isn't as deep. So what a lot of these companies will do is go out and sell their futures contracts because all these guys do, their energy, their gas. They are constantly buying and selling and executing futures contracts for oil to produce it and literally put it in their gas stations. Well, what ends up happening is if you've got a futures contract for $98 that you bought 20 months ago, a year and a half ago, and now oil's going at 110, it's pretty easy to sell a few of those and make a bunch of money to actually pad that bottom line. So, yes, is it kind of a recession-proof or economic proof? Yes, no. It can be, but I would play it as something bullish. I'll write it down. Sure. Thanks, Dan, for the talking point. All right, moving on. Okay, finishing up. There we go. LMD. You guys know I lose my place if I'm not wearing my glasses. LMND. Oh, lemonade's been popping up quite a bit. Ooh, look at this. So what do we got here? June 3rd, 2018, 16 put butterfly, 3-1 risk reward. That is just clean cut, isn't it? Draw some lines. Right at 20. Did you say 2018? 16. And 16, I imagine, is right there at that support. Yeah, a little bit of a rollover. He's looking to the 3rd of June. Pretty close, right? Look at that. Week and a half. That is my... I like that wheelhouse. Week and a half is such a fun trade. Except for when it's not, right? When everything expires a half a week too late or half a week too early. Okay. That little trader joke there. Sorry. Yo, Sebastian, I like it. I like it. I'm going to put down LMD. I'm going to put on the bear with a little sideways. Or lemonade, sorry, with a little sideways there. All right, to the bottom. Hey, I got through everybody. All right, I'll write these down for you. Let's see what the markets have been doing. Let me erase that chicken scratch. There we go. S&P back to neutral. Look at the NASDAQ holding on to small gain here. Day's about halfway over. Things can change pretty quickly. You guys know how it works. Just error to the bear side. I don't like to tell people how to trade. I like to give suggestions. That's all this is. Or ideas and share them. But if you're going to make a mistake, just do it to the bear side. Let's see. These are actually cool trades, guys. Thanks for it. And hey, if you want to take a look at GameStop, play that. I've got a lot of friends that don't trade often, that talk about AMC and GameStop and Bitcoin, and I just laugh and say I don't touch any of those really. But if you want to, feel free. Sorry guys, I'm trying to get this done. There we go. Okay, that's enough. Where am I? From current slide. Okay, so here's our list. A little slow today. And I like lemonade sideways. That might be a good one as well. So, yeah, because it's kind of a targeted butterfly there. Thanks, Sebastian. Thanks, guys. Thanks, everybody. So it's a pretty good list. If you want to run out and play with GameStop, that might be kind of cool. Take a look at the call ratio or put ratio back spread on it. You guys can always review our coursework on Maverick, right? So if you want a refresher, just jump on a video. Okay, guys. Well, thank you so much for joining me. Appreciate it. Appreciate all the feedback. Good luck to you. We'll talk to you next time. Bye, everyone.